Hey everyone, it's that time to cut through the noise and get real about what's happening in the world of crypto. From the explosive growth of layer 2 solutions like Arbitrum to Taiwan's limits on who can invest in digital assets, if you can even call it a digital asset, and even the wild predictions for Bitcoin's price in this unpredictable bull market. We've got a lot to talk about. Plus, let's not forget why self-custody is so important right now and why you should think twice or 3 times or 4 times before handing over your Bitcoin to pay taxes. Let's dive in. So recently, it's now coming out that Robinhood is allowing European users to withdraw their Bitcoin and cryptocurrencies to their own wallets. You should take advantage of self-custody while you still can. This is not just a warning, it's a reality check because increasing regulations and centralized platforms with them holding more power, now is the time to take control of your assets. Platforms can freeze funds, governments can impose restrictions, but when you self-custody your Bitcoin, you own it, nobody else. Don't wait until it's too late. The power of crypto lies in personal ownership, and that's something that you do not want to compromise. Let's shift gears to Arbitrum, a layer 2 scaling solution that's taking the Ethereum ecosystem by storm. Recently, Arbitrum surpassed a massive milestone of 1 billion transactions, solidifying its position as the leading layer 2 solution by total value locked, also known as TVL. Now, what makes Arbitrum stand out is its focus on speed and efficiency while still ensuring the security of the Ethereum network. So for those of you looking to avoid high gas fees without compromising decentralization, Arbitrum is a solution worth watching. Now on to Taiwan's new stance on crypto investment. The country's financial regulators have approved digital asset ETFs, but only for professional investors. Let me break that down for you. Taiwan isn't letting the average citizen reap the benefits of crypto. Instead, they're limiting exposure to a select few. And even then, it's not real crypto, it's just crypto ETFs. So instead of owning actual Bitcoin or Ethereum, investors are dealing with another layer of abstraction. This kind of gatekeeping is a far cry from the decentralized, inclusive world that crypto was designed to foster. Now, taking it over to the US, we're seeing a wide range of people supporting cryptocurrency, not just tech enthusiasts. Crypto voters come from all walks of life now and from every economic background and geographic location. This is important because it shows that crypto isn't just a niche interest anymore. It's a global movement, and it's not just about financial speculation. It's about people voting with their dollar, recognizing the value of a decentralized future. This shift in demographics reflects the growing mainstream acceptance and real-world utility of cryptocurrencies. Speaking of governments, one US state, Ohio, is proposing a bill to allow Bitcoin payments for taxes and fees. Now, I can't think of a worse use for your Bitcoin than handing it over to the government. Give them the fiat they love to print endlessly and keep your Bitcoin for yourself. Because Bitcoin is meant to protect your financial future, not fund government budgets. So while the idea of paying taxes in Bitcoin might sound like progress, it's really just another way for centralized entities to get their hands on your hard-earned crypto. Now, when we talk about the current bull run, it's a bit weird to say the least. Compared to previous runs, this one has been driven by unusual factors. Unlike earlier bull runs driven by retail hype or institutional FOMO, this one has been supported by macroeconomic instability, rising geopolitical tensions, and even the push towards AI and blockchain integration. What does this mean for you? Well, it means that this cycle could be less predictable, obviously, and the usual indicators might not apply in the same way. Investors should be cautious and ready for unexpected shifts. It's crucial to remember that timing the market is nearly impossible. Focus on the fundamentals, not just a short-term price action, and you'll have a better chance of success in this volatile market. In contrast to the more predictable runs of the past, this one feels like it's breaking all the old rules, but that's also what makes it exciting. Bitcoin has always defied expectations, and this time is no different. The future is still wide open, and the potential for growth remains as strong as ever. So what does this all mean for you? Whether it's Taiwan restricting access to crypto or the US proposing Bitcoin tax payments, the message is clear. We are at a crossroads between decentralization and control. Now more than ever, it's critical to understand the developments happening around us, take advantage of self-custody, and be mindful of the long-term vision for Bitcoin and crypto. Because remember, this space was built to empower you, the individual. So don't let institutions or governments take that power away. Until next time, stay informed, stay empowered, and protect your financial freedom.